Okay, here we go. I'm going to switch to Cliff because that's what I'm going to use. That's what I'm going to use as the example. Okay, price action. I'm just going to go right down the list to start off here. What are the core price action signals used for entries and exits? Once again, everything depends on your time frame, but for me, I use RSI and divergence, and that uh, for me that stays for all time frames. Like weekly, I'm holding until this RSI breaks stock wise. This is a weekly time frame. So I'm holding stock until we can break this RSI or this pattern fails and breaks down. So one or the other. So that would holding stock, that would also include leaps. And leaps are options longer than a year and in the money or at the money because they act like stock. Okay, now when you go to day, this is what you could use for swing trading. And that would be, I would not do options any closer than 3 months. And 3 months is too close for me. I like 4 months. I like 6 months at least. But 4 months would be, uh, I'd feel fairly comfortable with that. And so this is an using the RSI again here at your bottom. So your RSI bottomed, then you bounced up. So I'm looking until this RSI breaks or until the pattern fails. So that's what I'm waiting for. For my entry is the RSI low and hopefully with divergence. And see, this had, did this even have divergence? Let us see. It doesn't always have divergence. That's just ideal. Fives should have divergence. So this had a tiny divergence, but I bet on the hourly this had a big divergence. I'm still too far. There we go. Yeah, from here, your RSI low to here, your new low, you had divergence. But the hourly you can also use for swing trading, and it would be the same until this RSI breaks. So you could even do this. So we're holding, we're holding, we're holding, we're holding, See how the chop that we're holding through? See how bad it gets, but it's still going up. So actually, if you miss that buy, your other buy's in here because of this formation, but I digress. Anyway, so you're holding, you're holding, you're holding, and look at that, you're still holding. And you went through 17 and down already. So this is this is a lot of chop, but you bought at $5, $6. You're at 15. So you have to condition your mentality. I mean, you could lower your RSI level to, I mean, you could lower this line, and then whenever you get one of these peaks, you could sell. I mean, you could play it that way. I just choose not to. I choose to hold through the entire cycle. As you know, I've sold options intraday, and that's going off of like these, like pop, like this morning, I was selling options into that. Yeah, Thursday, I was selling options, and then they caught me and I rolled them, and yeah. But anyways, I digress again. But the RSI is the only thing that I use. Sometimes I'll look at the slow fast, and I'll look at volume just as a confirmation. But RSI tells me all that information. So that's really the only thing I need, RSI and a chart. And I really just use RSI as a confirmation. All I really need is the chart. Okay. So those are the other things you can use for buy and sell signals. If you're swing trading also, are Bollingers. And see here where the bottom was also, you also hit that bottom Bollinger, and you had a hammer type candle. And so there are traders that will trade just off hitting a Bollinger like that. Now, I don't like to, because this is a squeeze down. I like to wait till you get above it. But see how you gapped up? That's actually the start of a three wave. But yeah, this to me would have been the buy here in this range. And then you come out, and when you pop out of Bollingers, see, that would have been a buy for me. When you pop out of Bollingers, buy, sell. And you don't stay out of Bollingers for very long. Usually the general rule is four candles outside of a Bollinger. So 1, 2, 3, 4, then you pull back. And so you usually don't get more than 4. So that's just something just to keep in mind. Yes, when I say RSI breaks, that means the RSI breaks your low set here. This. If RSI breaks that, that trend is over. But you'll see a divergence here before that happens. You'll peak this RSI. It'd be the same as if you bought here. Here's this RSI. So here you could have sold. I mean, because you peaked out here. You could have sold here and then rebought here. Because this is your low. So if you're counting the waves, this low should hold. So anytime your RSI bottoms here, this can be a buy. You can wait till the crosses. I generally don't. I'm generally looking for divergences at bottoms. Yeah, let me see if I can show divergences better. Let's see if this has one. Yeah, here's a good divergence, and here's a low. You see, this is a great like swing trade. You come in, you drop, you open the next day with a typical cliff dive in the morning, except you get bullish divergence here. So then that pops up and then drops down. So you can this is buyable. And so you pop up. Now this is your RSI. So you can set that. You can go until this breaks. And so you're holding, you pop out. Now you could sell here, or you could wait until you get this higher high with a lower RSI. What on earth was that? You can get a higher high with a lower RSI. And then that is a sell signal. And so this comes down. You don't have divergence here. So this wasn't, I mean, you had to have just belief that that was an ABC bottom. And here you have a higher high again. A higher high than this with a lower RSI. So then you had a sell off again. And so now you should do the same thing. You'll probably get a higher high than this, and then you'll get a lower high and it'll drop. It all depends on how Cliff wants to act tomorrow. But yeah, there's a bunch of trades in here with Cliff. I don't really do supply demand zone. There's ways to do it that are really easy. That's all these lines are. They're just supply demand zones. That's how Fibonacci, that's RSI, they all match up. So your demand zones, like here, I would draw lines like here, 1350 was probably one. And then you're going to have another one in this area. And you want to do, they're really zones. They're not really lines. So lines just act as a area to me. But yeah, here's going to be your next one right here. 1660, which is 1650 is your fib. So yeah, right there is going to be your next one. So it's just a matter of drawing lines, and then your fibs is the same as supply demand zones. What kind of wicks signal trend continuation or reversals? When you this right here is called an abandoned baby. You gapped up, you were outside the Bollinger, and you had a wick up and a wick down. That's a sell signal in every trading book. When you pop out of a Bollinger like this and you get a wick, that's a sure sell signal. Wicks are price rejection or absorption at the bottom. Like, I want this. The rejection at the top, I don't want it. And absorption at the bottom, I do want it. So that's what wicks are telling you. Trend reversals, you want to see wicks. Yeah, you want to see long wicks. Long wicks are good signs for trend reversals, but it's not it's not just the single candles. You want to see follow through. Like, this is great because you had a big sell and then they bought it up, and then the next day they held that and pushed it up. That's a clear trend reversal right there. That's a 3 candle trend reversal. How do you distinguish real breakouts from failed breakouts? That's the trick, isn't it? You've got to watch RSI. If RSI spikes, I wish I could think of one offhand. If if this were to be like a super high, I think it did it back here. Hang on. Hang with me for one moment. This. Let me get this. Oh, this did have divergence. Oh, I thought that spiked up. Oh, that did have divergence. Never mind. I thought that was but if you have a really high RSI, like if this RSI broke your line and it didn't have any divergence, that's a diagonal or a flat, or it's caught in something. So that's one way to distinguish a what will be a failed breakout. The problem is you don't know when it's going to fail. I mean, you can always tell when it's done, but while it's happening, it just looks like a joyride. Which that's also a general rule of mine, is if you're celebrating, you should be selling. Like if I'm making happy posts, I'm selling. Oh, what are the most common bull bear traps? That would be your flats and diagonals. And all that means is they have a lot of overlap. The price overlaps a lot, which is exactly what the Qs are in right now. See, that's just a lot of overlap. A whole lot of overlap. But here's something tricky with the we're looking bullish on these larger time frames. Remember what I said about the 3 candle move? You had a peak, you sold down, they bought it up, they sold down, they're holding this level 613, and this is on a monthly scale right here. So I mean, if we close above 637, it's on. Like it's on. So that's just something to watch for. But on an hourly, that's a whole lot of chop. Overlap doesn't necessarily always mean consolidating. It could be getting ready to go down. Like this could, here's a daily. Like there are two opinions on this. And look, Moo even drew a line here. See, this is a trend line that was broken and now has a failed return. So that's one way to look at it. This is a lot of distribution. They call it distribution, where you're basically the institutions are selling into retail. But if that were true, you would be hearing good news. They'd be wanting you to buy. They'd be telling you everything's hunky dory and you need to get into the market. But that's not what they're telling you. So yeah, I have a contrarian view, although mine matches Moo. So I guess it's not that contrarian. What setups look good but fail often? These overlaps, diagonals, flats, and a flat. Here's a flat, and you can tell a flat because it's flat. See, you didn't go anywhere up or down. This is also, this isn't a flat. This is what I think this is a volatility squeeze. But that's, well, we can get into that now. I think that this can't sell because there's too many buyers. And so this entire zone, because the sellers had their chance and they couldn't do it. And they had a big candle and they couldn't get follow through. And now look how small the candles are getting smaller. Like they've had every opportunity. Here's a big one back here, right in the zone. They've had every opportunity to short this. Shorting, we're winning. Nope. Shorting, we're winning. Nope. Shorting, we're winning. Nope. Like the Bears, I mean, at what point do they stop shorting? Or there's another way to look at it. People are selling and people are buying. At what point do people just stop selling? What point do we run out of sellers here? The other way to look at it is maybe we're running out of buyers. I don't view it that way, but that's one way to look at it. I think this was the shootout, and I think we come back up. Now I'm also not discounting that we could shoot down again, and maybe even pretty badly, like down into here for another flat 580, 590, 585, 590, and then rip back up. But I don't think you can crash coming out of this. I think there's too many buyers. This to me shows too many buyers because these big candles just get eaten up and then they go higher. Eaten up and then they go higher. Eaten up and then we go higher. Eaten up and then they go higher. Eaten up and what? Where are we now? My guess is then we go higher. But those are the ones that fail the most often. Overlap, and overlaps are hard. That's 4 waves get a lot of overlap. 4 waves are designed to get you out of the market. They're meant to, confuse you. If you don't know where you are in a wave, you're probably in a 4. So this is just meant to confuse you and toss you out of the market. If you are not, I mean, this is why also below the 5 MA, this is also why you don't hold overnight. Because look at this. You could have gapped, I mean, you could have not just you could have, you did gap down several times overnight. You gapped up several times. But that's just what these do. You can't hold overnight. You just got to be in and out of these because they're meant to chew you up. But on a larger time frame, I think it moves up. Okay. I hope that answered those. Let's move to entries and exits. How do you identify the best entry spots and what confirmation? The RSI. See, here's another one. You could even do it on the Qs. On the hourly, you had a bullish divergence on this RSI. You hit the bottom. Like this was a big panic day. You just had to, it was a big sell. Everyone was panicking. It's a green candle now, but when it was here, it was red. So you just have to, like I say, you just have to put on your big kid pants and be an adult and buy when people are scared. You just have to have belief that that's going to hold. And then hopefully on a smaller time frame, like a 5 minute, I can't go to a 5 minute because it's going to shoot me all the way to the beginning. But hopefully you have a bullish divergence on something like a 5 minute, which I'm sure you did. I'm sure you had a massive divergence actually. But yeah, that's just how you have to enter it. You're not going to like your entries. I mean, you should like them because you should be set up for them, but no one else will like your entries. Let me put it that way. Everyone else will say you're a fool. Are there specific times of the day that are entry opportunities? Yes. Trading generally goes in the same cycles, and especially on Friday, because Friday are option days. So you have the morning rush, which is the first half hour of the market. And that's retail being giddy over what's happening pre-market or whatever. That's just the first half hour is uh, high volatility, up or down, doesn't matter, high volatility. Then after that calms down, you tend to settle on a trend and a direction. That goes until they start taking profits before lunch. And then about 12:30, this is all Eastern time. About 12:30 they come back from lunch. And then that's usually when they resume the trend. So that's that'll take it to close. And the last hour is when not retail, is when institutions start looking to buy, and specifically the last 10 minutes, because by then you have your daily candle you pretty much know what your daily candle is going to look like. You have you have 7 hourly candles up to that point. So, I mean, you have a lot of information for the day. So at the last couple minutes, you can place a bunch of orders. And especially the last minute, you'll see them really flood in there. Uh, the best exit methods are if you're just lucky enough to catch it, because really you've got to be quick. Like, you've got to see this pop out of the Bollinger. You can't be all giddy and happy and yay, I'm gonna buy a yacht, and then you miss it. You've got to see that and sell instantly if that's what you're looking to do. I'm generally a longer holder, so I um I don't worry about these. I bought at Lowe's, so I'm way in the money. So I can just wake up some days and sell. Like, if they're good days, then just sell. I don't have to be perfect. Uh, I give myself by buying the lows, I give myself a lot of leeway later. How do you avoid chasing or FOMO? The same thing. If it's a big day and people are excited, I'm not, and I don't have a position in it, I don't want to be anywhere near it. If it's over, uh, I don't even like seeing anything 2% to buy even option positions in. I don't. I mean, that makes me nervous. I'll do it because sometimes I day trade and I'm bored, but that's not my style. I like to see, like, this down 6.7%. That's what I like to see. I'll buy that. So I like to see big red days to buy. That gives me a signal that I should start looking at that. If it's a stock that I want. And that's how the whole thing starts. Is it a stock that I want? If it's not a stock that I want, why am I putting money in it? Um, so yeah, it can't just be stock go up. That's not a good reason. I mean, it's a reason, But if that's your reason, then when stock goes up, sell it. Like I have a reason to hold some stocks. I have a belief that they're going to go up. So I'll just keep buying bottoms like this. This is one. I'll just keep buying bottoms when it gets RSI drops here. And yeah, I'll wait for the big payday when this starts coming out of this. I just have to have that belief that I picked the bottom here. And that RSI reset, that's actually, so this was just now that I'm looking at this, that was just a leading diagonal. That wasn't a bullish wave. That wasn't 5 waves. That was just a leading diagonal up. So then down. So now you're starting your move. This is the start of the 1, 2, 3, 4, 5. So this was just all to set it up, which that's how moves start, leading diagonals. And leading diagonals are lightning in, lightning out. And see, it's a leading diagonal because it's the overlap. See all the overlap. That's also, since we're here, that's also a Livermore cylinder. But if I were to draw a line that way and a line this way, you would have your 1, 2, 3, 4, 5, 6, 7, and we're gone. So this right here is a Livermore cylinder, which is also a leading diagonal. And then you had your lightning out, your lightning in, and then your lightning out. And so that leading diagonal was part of a larger leading diagonal where you have your lightning in, and now we should have our lightning out. And if this just goes 3 waves or does another overlapping thing like this, then we're going to do that again. We're going to play the same rope-a-dope game. But it doesn't have that look yet. I think I counted this as 5 waves. Oh, let me see. Oh, I don't have a count on. See, this spiked without divergence. This is a diagonal. Choppy chop. So this whole thing might still be in the diagonal. Yeah, this is kind of acting like a diagonal out of here again. But that could be just another setup to, spike. Yeah. Okay. Sorry, I got hung up on this. So that's how I avoid chasing or FOMO. If it's a big green day or um, like a little green day coming off of a big green day, I still don't like that. If price is too far away from the moving averages, I don't like that. That's a warning sign. I mean, they're all just a series of all you're doing is playing the averages, the odds. So it's all just a series of odds. Am I too far away from the 50? Probably. Am I outside the Bollinger? Definitely. You know, do I want to sell? I don't know. That's a personal decision, but you just have to look at signs and take an inventory. And if you have fewer positions or positions that you have high confidence in, then having patience for things like this is easy. When should you scale in or scale out? A that's a matter of there's so many different ways to do it, and I do it differently for almost every stock. It seems. Um, I'm like a trash shark. I just eat whatever's best that day. Um, so yeah, I'm a terrible one at this because I will just buy on days. Um, like if it's a red day on a stock, I will just buy. That's because I have high confidence. Like SMR, if SMR is down below 20 and everybody's freaking out, like, did you see SMR? SMR is down 6%. I'm going, it's down 6%. Oh, I better get some buy orders in. Yeah, I'll just wait. I have time. What invalidates a setup and requires immediate exit? New lows on major time frames. Breaking 132 would be very bad in triple D. Breaking 125 would be a nightmare. Does that make sense? Once you set a low, that can be your when you buy, you can make that your stop if you're buying lows like that. If you're chasing like momentum, like if you're buying in here, buying on the squeeze, that's a whole different style of that's when you just got to go to the low time frames and buy when RSI is low and sell when RSI is high. That I mean, and it's that simple. And here you would have been crushed. Well, you would have made out all right, but look, because you'd have bought here, you'd have lived through this unless you sold or got stopped out, and then up here you would have sold. So you would have made 13 to 18. I mean, that's still. I mean, we're still talking $5 by just buying low RSI, selling high RSI. And in here, you're just chopping. So you wouldn't do anything in here. But in here, you could, okay, buy low RSI. Here you come up, you get a divergence. So that should be a warning. I might want to look to get out. You start dropping. Hopefully you sell somewhere in here. But yeah, that's one way to do it. And that's on a weekly time frame. That was kind of a bad example, but no, it's not, because I buy low weekly RSI. So breaking lows that's bad. Like this should hold. Uh, Trading cues. Okay, so let's go back to the cues. How to use the high-low setups. Well, that looks great. Like it's gonna pop. I hope it does Monday. The high lows are just levels or zones where you can buy again if your RSI is low. So like if I have this zone set and it hits it and RSI is low, then I can have a level of confidence that I could buy this. And your high, like 626, I said was going to be that was going to be tough resistance. So we didn't quite make it. And again, on Friday, I said I sold early because I think the high was 620. I'll have to double check, but I think it was 623.50, which I think we hit pretty early. But yeah, I sold early on that day because Friday options day, you have a swing, then you have a big move, and then you go flat because they want to just crush the options. They want to crush the volatility in them. My recommendation for QQQ options is 7 to 10 days, just because I don't recommend doing the 0 DTEs or 1 DTE, because you have to be, just because you have to know what you're doing. Otherwise it'll drop on you. So 7 to 10 at least gives you some time. It gives you a little leeway. It's just for experience levels. I don't even like trading 0 DTEs. I will sometimes, but I don't. I have to have a perfect setup. I mean, it has to be something so glaring. Like I walk into the room and say, oh my God, I have to have that. But that would be the only thing. When I day trade QQs, I'll do 7 to 10 days. If I'm holding overnight, which we have to be above the 5, which we are, I'll go out 20 or 30 days. I'll go further out. Like I have some February 20th contracts. I have some 625s. February 20th, 625s. And some 650s and 680s and some 700s. Just for funsies. How do different sessions behave? Oh, I think I did that. The open, you have the first half hour, which is, here's a perfect example. The first half hour is retail just being all bonkers, doing whatever they're doing. And then you choose a trend, and that goes until when that trend usually tires, and then here's noon. Yeah, this is just about noon. They come back and they usually resume the trend, which they would have done, but it's options Friday. So they crushed it. And yeah, this is going to be hard to use an example of that because it's in the chop. But Cliff is another one that is a good example of that. A good trend. You'll have your first half hour. Oh, that was a Friday again. Your first half hour of retail, and then the market does what it does. And then your last hour is institutions. So here, institutions were buying this up because you see your divergence. You're starting to get divergence. So that was a sign that they were starting to get interested. And then you had the low open that immediately got bought up because look at your divergence. So they immediately jumped on that. I wasn't sure they would. I thought maybe they were going to pop that. I thought they were going to maybe buy it and then pop it down and buy it up, but they just went right after that. Like barracudas, they just. Consistently is a. Do any intraday patterns repeat consistently? That's tough. Because consistently is a hard phrasing. But like generally, Cliff sells it open and then gets bought up, and then if Cliff is bullish, it'll sell it open and then get bought up and start going up. It's the Cliff dip. But that's just a generality. So, but you can use it. Like if you're in a bullish trend like this, even here, and they just sell it open, you can just buy that even just as a day trade or something. But yeah, like I said, I could just trade Cliff. I could make an entire just firm with just Cliff. Also, I'll tell you my generalities for weekly timeframes. I like to sell on Fridays. Sometimes I'll buy long positions late on Fridays because you're going to get 2 days of theta decay. So you don't want to buy options on Friday. You want to sell options. Monday is generally not a buy day. That's generally also, it's not the best sell day because you don't get any theta decay for the week. You can buy because you have the entire week, but Monday's usually just a continuation of Friday. So Monday I generally sit out and I want to see what the market wants to do. So that's why you'll hear me say, well, we got to see what Monday does. Because I want to see what that candle's gonna open at for the weekly. Tuesday and Wednesday and Thursday are generally your buying days. But usually Tuesday and Wednesday are the best. And that's, again, just generalities. It's better not to trade when it's really blood red days. when it's blood red, I just go on a lot of walks. Because you don't want to buy. You don't want to catch falling knives. Maybe you do at the very end of the day, but again, I can just go for a lot of walks and watch it sell off all day. And then at the end of the day, I'll see if there's anything I want to pick at. But yeah, blood red days, good days not to trade. I'm not one of those people that trade every direction the market goes, up, down, up, down. Why give yourself the headache? I like to find stocks that are in trends and stay with them. That's way less headache. Like my cliff average is 6. So I have no worries here. I have cliff leaps that are deep in the money. I have cliff options all over the place that are in the money. I mean, I just wake up and it's a good day. I mean, no matter where cliff is, it's a good day. Risk management. Where should stop loss be placed when trading cues? That's a good one. Especially if the trend goes against the position. If you can see that the trend is going against the position, don't hold the position. I mean, if you can physically see, like, it's no mystery anymore, then why be a hero? That's it. Yeah, there are no heroes. That was a silly statement. There are no heroes in the market. No, if you can see that the trend has gone against you, clearly, just get out. Just save yourself. Is it better to exit same day or hold 1 to 2 days? That all depends on if you're above the 5 MA. If you're above the 5 MA, you can hold overnight because the odds are you're going to stay in that bullish trend. If you're below the 5 MA, you don't really know what you're going to do. Generally, if you're below the 5, you want to go to the next lower level. Here's an example. When this closed below the 5, it started a downtrend. Now, it doesn't always happen. Like here, you can be caught sideways. So it's just a generality, but for safety reasons, that's what I use the 5 MA on whether or not I hold overnight. Risk reward that's all up to you and how you feel about the trade, I guess. Like sometimes I'll do high risk, high reward Q trades, and sometimes I'll go, like I said, 20 days out and in the money, just because I'll just take the high delta gain. Like I said, I'm kind of a trash shark. I just pick what feels good, and then I look at the delta and theta and see what matches, and then I'll I'll buy it for a while. And then at the end of the day, or whenever like Friday, I had those positions, those in the money positions, and I sold them because I just didn't want to hold Friday. So when we spiked Friday morning, like I said, I was out early on that spike, but I got the spike. So like I had a 2 hours in the morning and made money. And at that point I could have closed down and just left shop. So I mean, it's all personal preference, but I don't like to trade a bunch. You can trade yourself to death, trade your account to death. But okay, so where should your stop loss be placed when trading cues? That again is, I like, it depends on how you're going to trade because I like to buy bottoms. So my stop loss would be like I would buy it in this range, and my stop loss would be if it broke out of this range in a candle that not just breakout, but it has to have a follow through breakout. So this would be my buy range unless it failed that follow through breakout. Then that'd stop me out. But this would just be my buy range. And then I'd just watch to see if it stopped me out. So my stops are all pretty tight on the cues. And if you're able to set like trailing stop losses, those work. I don't like them, but I don't like using stops. If I'm trading, I'll actively trade it. Like I'll sit there with the option screen and I'll be watching the cues on, a couple different time frames and then watching my options, and I'll trade them that way because I can see IV spikes in the options also. But yeah. So I set zones to buy. And then especially if I see a good candle, and a lot of times you can say it like it's set up perfectly and I'm going to get this buy, but the volatility will change and that option will spike on you. So you can have a set, especially the cues. You can have a set order like, oh, I'll pay 500 for this contract right here, and then all of a sudden the IV spikes and your contract just went to 520 because now everyone knows it's going to reverse. So then you end up that you can end up chasing, and that's where you can get into trouble because when that IV spikes, that's when you instinctively want to chase that rather than just wait for that candle to sell down a little and then buy it. But that's one that's difficult not to chase because that's in the heat of the moment because you have the buy order and you're right, and the price moves on you before the candle does. So you'll see that a lot, and then the candle moves and you can't get that option anymore. So yeah, that creates chasing or not opportunities, chasing problems. So you just have to know that nothing goes straight up, and there's always another entry. uh IV IV is dependent on the volatility. Volatil IV is dependent on that. That's dumb. Uh, IV is how much the the underlying asset, the stock, can move. So a high volatility, you expect high movements. Now, when the Qs start really trending up and you get low IV, that's because there's no worry. What we have in the market is a lot of worry, so you get a lot of um, people selling the market, and a lot of people, these big swings that I was talking about, that causes high IV in the market. If you were trending, you wouldn't get those IV spikes like that. Yeah, IV. the I always joke that IV always works against you. It doesn't matter if the stock goes up, IV is going to go against you. The stock goes down, IV is going to go against you. It's one of those funny things. Okay, let's go to um, that depends on how you're trading it. If you're day trading, okay, I'll go. If I'm day trading the Qs, I use the 3 minute personally. So, I mean, on that live call, I said I'd bought, and huh, this is different than the RSI that I was looking at because I had RSI lows. This looks way different than my RSI. That's funny. But yeah, I'll use the 3 minute when I day trade the Qs. But I also watch the 5 minute, 30 minute, and hourly. And every once in a while, I'll check on the daily. Um, just, like once or twice. But the 3 minute, I have the 5 day moving average. That line is always present on my 3 minute. So I always, when I'm day trading, I always know where that 5 day moving average is. I use the 30 minute and hourly just to confirm the trend, and especially to look for divergences. I don't like the 1 minute. It's too much noise. So the 3 minute smooths it out just enough. Uh, Ticker selection. How do you choose certain tickers for scalping day trading on a given day? Um, once again, you're going to love this answer. I'm a trash shark. Um, I watch, I mean, if I say hundreds, I don't think that's an understatement. I watch 100 charts and I'll scan through and just keep looking and looking. And if something draws my interest, then I'll buy it. For scalping day trading, I like to, well, here I go again. I like to stick to stocks that I know, which that is a lot of stocks. So basically, anything that I'm looking at that I come across, if it looks good to me, I'll buy it. So that's how I choose. I don't use a scanner on a daily basis. I use scanners to find bottoms. Like my scanners are for 52-week lows, RSI below 20. Those are what I'm scanning for. I'm not looking for breakouts. So when I go looking at for stocks, I'm looking at beat down stocks. And so then when they start running, that's what I'll be looking at. Those are the charts that I'll be looking at. The charts that I'm looking at are either stocks that are running or stocks that are beaten down. So if they're beaten down, then I want to buy. If they're running, then I want to sell against that. Now, sometimes I'll have stocks that are running and start to sell down, and I'll buy them really quick for a day trade. But yeah, I'm a trash shark. I do it all. The stocks that I own feed my ability to buy more stocks. That my stocks are my bank. And they become my bank because I buy them low. Like triple D's. That's a $2 stock. I'm not looking for that to stay a $2 stock forever. I'm looking for that to be those uranium stocks that I have now. I mean, those I can sell calls against those. Oh, I hate doing that, but yeah, I can sell calls against those for more than I paid for the stock now. There's other stocks like energy stocks that are paying dividends. I mean, I've Zim's another one. Zim's paid out more than I ever paid for the stock. So owning it is free. Selling calls against it is just more money. I mean, Zim has been just like someone handing me a bank card. Here, spend. Okay. But yeah, that's just how I invest in stocks. And like I said, I have like I need to stop saying that. Um, I have a lot of different accounts for a lot of different styles. My fun account is almost all options. But yeah, what characteristics make a good ticker for scalping? Uh, Again, I like to see something that has found a bottom and is looking like it's going to run again. So when you hear me talk about the waves, for scalping, I want to be in that 3 wave. So I'll look for the 1, 2. Like here, we had one on Qs. We had a smaller one here that if you were lucky you caught because it was at a low, one of the low levels. But on the larger one, you had a up and a down, so you can buy this pullback for the larger 3 wave. So you're thinking 1, 2, so hopefully I get a bigger 3 out of this, which luckily did. So the characteristics that I look for are they bottom. I buy bottoms, but okay. The safer way is to look for the bottom, then the reaction, then the pullback, then buy that. But I like to buy the bottoms. I like to buy the divergence on the bottoms and have my stops really, really low. Because see, if you buy this low, technically you could come up and bounce lower. That's the tough thing with not buying bottoms. But that's most traders want to see this move happen first, and then they want to buy this, and then they'll set their stop somewhere in there. I like to buy bottoms. Again, I said it. I also have a larger view and a larger time frame. When I say larger view, I mean a larger macroeconomic view. And so I have a larger theory of where the market's going. And so far, I have not been proven wrong. So until the market proves me wrong, I'm going to assume that my theory is correct and buy accordingly. And my theory is nothing stops this train. Foot on the gas, some bumps ahead. And the reason why that is because when everyone says that a shift is coming, that's true. It's already happened. It happened in 2016. And I don't know, there are no coincidences, but 2016 was the shift. That's when interest rates. Well, let's see if I can even just go to it. No, I want interest rates. How far back do we go? Okay. Here we go. Okay. This happened in 2016, we had a crossover in interest rates. And if you've listened to me talk any of this time, what is this? This is overlapping, right? This whole thing's overlapping. Lightning in. What happens after lightning in? Lightning out. So this 10-year is, yeah. And it's rates are going to go up. The days of cheap interest rates are over. Interest rates are going to go up. They're going to come down in the near term. Well, probably. But they're going to go up over time, over the next 40 years. We've had lowering interest rates since the 70s. That coincided with the decline in the dollar. Because we took the dollar off the gold standard. We tied it to oil. It became the petrodollar. Now we've taken the dollar off of oil. It's no longer the petrodollar because they no longer trade oil exclusively in dollars. Now they trade oil in yen, ruples, whatever they want to trade their currency for. Oil is now trading through Saudi Arabia. It was also through South America. Well, basically all of the BRICS countries were trading oil in anything, not just the dollar. So the petrodollar died. So what we have is we have an increasing interest rate environment, and also the VIX bottomed at that same time. Right here, you can see this is the VIX bottom. So this is your 1, 2. I mean, we're gonna have a crazy crash some day here, some month, sometime we're going to have a crazy crash because the VIX bottomed. So we're in a higher volatility environment. So the market and interest rates, you had free, cheap, easy money all the way up until 2016, 2016 to 2018, about, let's call it a range. You had easy, cheap money, and you had low volatility. That changed, and you had COVID kind of was the nail in the coffin because it cut all the trade. It finally cut the trade ties. So now what's causing the increased volatility is deglobalization, because everything's getting moved from the dollar. So you no longer have a petrodollar. You have to tie the currency to something else. Anyone want to guess what everyone wants to tie their currency to? Anybody want to guess? Oh yeah, we got a winner in here. Absolutely, that's what they want to tie it to. that. That is what they want to tie the currency to. So this is why I have been saying, as long as I've been saying, you want to own metals. You're no longer just competing with me and crazy hoarder neighbor guy. You're competing with governments. You're competing with corporations. You're competing with billionaires that are now scared shitless. You're competing with people that can actually afford to move these numbers. And so this is the new environment that we're moving into. And because the dollar is no longer king currency, guess what every other country in the world is doing? If you can buy oil with your own currency, what are you going to do? You're going to print your own goddamn currency. So every country in the world has just turned the printer on into go mode. Japan just announced the other day. That's what Japan's doing. And when you turn the printer on, GDP goes up. GDP equals money printer. So all these other countries, and you'll hear the panic everywhere. And, oh, China's selling the bonds, and oh, Japan's selling the bonds, and the yen carry trade, and blah, 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 blah. It doesn't matter, because all the countries are printing their own money. They're going to buy their own debt. They're going to try to back it to something like this or crypto or whatever else they want to back it to. And the currency will keep declining. Every currency will keep declining. Currencies don't go up. Fiat currencies don't go up ever over time. They only go down. Gold goes up. Actually, gold just stays the same forever, but your currency drops so far, it looks like gold's going up. But this is what's causing the nothing stops this train. And here's the other part of this. I'm just going to go on a tirade here since I'm already going. When I share that meme in the group where it shows all of the Western Hemisphere from Greenland to the tip of South America, and it says America, and then it has Trump dressed as Gandalf on the Panama Canal, and it says "You shall not pass," and then it has both oceans that say America. That's not a joke. That's real. People that are very high up take that very seriously, and that's happening. So that's what happened with Venezuela. Venezuela was trading with China, and they were trading rare earths, and they were also trading with Russia. And that is no longer going to be allowed under the New America Doctrine. And the New America Doctrine is the old America Doctrine of all of America is America. From the very bottom to the very top, it's all America. And we'll control trade through the northern hemisphere. It's through the western hemisphere. this also means we kicked Europe to the curb. Uh, Basically said, take your ball and go home. So, in response, Europe now has to turn on all their money printers on overdrive, and they've got massive problems because they have energy problems. America does not have energy problems. We don't have mineral problems. And when I say America, I mean the Western Hemisphere. Europe does not. The Scandinavian countries, they've got plenty of oil, but that's the problem with Europe. When it fractures, it really gets the haves and the have-nots, and that's when wars like to break out in Europe. And so that leads me to the third part of all of this deglobalization and money printing. When you print the money, you have to have something to spend it on. And you would like to think that they would spend it on people and infrastructure, and we'd have awesome airports, and we'd be teleporting, and everyone would be super healthy, and we'd have these awesome indoor greenhouses, and we could have these beautiful futuristic places that we're going to build on. But no, they're spending on militaries. Every single one of the governments is spending on military. The U.S. started it because this is how you win spending wars. You have the biggest military on the block, and you say, I'm going to spend more on my biggest military on the block. And then China says, well, that's not good. I'd better spend more on my military too. And then Japan says, well, I don't like that. I'd better spend more on my military. And North Korea says, well, I don't like that. I'd better spend more on my military. And South Korea says, well, I don't like any of this. I better spend more on my military. And the dominoes have fallen, and they fell in 2018. I just knew they fell before most other people. And that is the market overview that we are at. Nothing stops this train. When you look at silver and you'll hear people say, like, they're going to fail to deliver and we're going to break the banks and blah, 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 blah. If you've read my posts, you don't break banks. Banks break you. And how they win this is they just limit the participation, which is what they're doing. They're holding back who can buy futures. They're holding back who can get deliveries. It's their market, and you're just participating in it at their leisure. So that's how they win this. They don't, silver doesn't fail to deliver, and then all these chuckleheads get SLV at 13,000 or whatever garbage they spew these days. That doesn't happen. What happens is they shut SLV down and they say, go kick rocks. But yeah, that's why you hold physical silver or PSLV, because at least they hold physical silver for you. But you don't hold SLV. They will just close that down one day. Mark my words. And it will be go kick rocks. That was part of the fund. Didn't you read? And by the way, remember I said one of these was going to start outperforming the others. And that was this guy. Look at him go. Because he's tied to uranium. Got to have it. If you're doing all these nuclear reactors, you got to have this. And that takes me back to the nothing stops this train. You've got to have energy for all this stuff. The Western Hemisphere has energy. South America has energy, which that's okay. Here we go. Seriously, where's my Brazil ETF? There's Brazil. And why is this happening? Because everybody's buying while they can. China's trying to empty all the coffers out of Africa and Australia and South America before they get closed down. I'm going to go on another side note here because I think it's funny that, like, I just turned on the news the other day and they were freaking out like, Iran spent X amount of money on new missiles. I'm like, are you kidding? After we just increased our military spending by like $2.5 trillion, we make news about Iran buying like 4 new missiles. How dare you defend yourselves? Okay. But anyways, yeah, that's why South America is breaking out. But what this leads to is all this money is pouring into South America right now. So it's going to get flooded with money. And when it gets flooded with money, then you have silly stuff like Ambev. This is South American beer. Why is it breaking out? Because money's flooding into South America. They're partying. They're having a good time. Someone is. I don't know. I'm not living there. But that's what the charts are showing me. Someone in South America has a bunch of money and they're buying a bunch of beer. The party's on. But this is why I'm all about investing in South America. This was why I like Argentina. This is why Argentina is starting to break out again. This is why BBAR, this little Argentina bank, suddenly has $10 trillion in assets. $10 trillion in assets. They're like, it's the most we've ever seen on record. Yeah. And guess what? It's just going to go up. Vale. Oh my God, Vale. Yeah. Because they're buying anything they can get their hands on. The Chinese are buying it. The Americans are buying it. The Russians are buying it. The Germans are buying it. Everybody's trying to buy as much of things as they can get their hands on. This is why the dragon woke up. Because they were coming after things that I have. This is going to be a beast. But here's another one. Look at this. I have to look at this. I can't remember what this is, like jeans or something. Oh, electric motors, generators. I just saw that it was Brazil and it was breaking out. And so I thought I should get some. But that's why South America's breaking out. That's why Vietnam's breaking out. That's why. Dun dun dun. This guy's breaking out. Because China needs oil, they need energy. And their access to South America is getting cut off. So where do they go next? Here. Okay. Now, since my tirade's done, I'll go back and see what questions I've missed. When I day trade, I will do strictly. I won't say strictly. I'll do options. Unless they don't have options, then I'll do shares. Sometimes I'll do shares just, I don't know, just because none of the options appeal to me. A lot of South America, sometimes I'll do shares. Like I've done shares on B-Bar, just because, again, the options have a wide spread. They don't appeal to me. When I buy options, do you prefer deep in the money or out of the money? And what type of delta do I prefer? That depends. That depends on what I'm doing with the options. If I'm buying leaps, if a stock is bottomed and I'm taking a position in it, I look at it as a game. I'll send a scout team in to see how that stock looks, and then once I decide I like it, I'll go all over it. So I'll buy stock, I'll buy leaps, I'll buy crazy out of the money options. I'll buy whatever looks good to me at the time that I'm buying it. Again, trash shark. So when I open up that option chain and I'm looking to buy, I'll search through that option chain and find what looks best to me. When I do leaps, I prefer in the money or at the money because they act as stock and I can instantly start selling calls against them. When I do swing trades, I prefer at the money or near the money, a little bit out of the money. I'll buy at my target. I'll buy options at my target price a lot of times. And those I like to sell when it spikes. I did that recently with Triple D, RR, and I had another. Under Armour. Those, when they had the big spikes, I had crazy options on those crazy. My target options, 6 calls, which seemed crazy at the time. And then when they spiked, those options doubled, and so I started selling those right away. But so it all just depends. I don't sell my leaps. I sell calls against them on big spikes. So that's all. What type of delta do I prefer is all. It all depends on the day. Delta leaps 80, 90. QQQ delta. Um, I'm anywhere between 40 and 60 probably. How far back? Okay. Question regarding looking for peak RSI. How far back from the chart should we look at? It depends on your time frame. Everything depends on your time frame because let's just go back to Cliff. Everything depends on your time frame because you could have bought here and sold here on an hourly. On a daily, you could have used this as your marker and sold up here. I mean, it all depends on what you want to do, how long you want to hold. This is the peak RSI so far, and this is not the high, or this is the high, but this is the peak RSI. So you've got to make a high with a higher RSI than this because you didn't break down. See, you got a lower RSI, but you haven't broken down. So because you're still bullish, then you've got to break this RSI eventually. And again, nothing is guaranteed. That's just my method. And again, this could take years for me. I don't know. I do it on weeklies. So see my line up here? We're nowhere near where I want to be. So that's why I have this stupid confidence in Cliff. Like everyone panicking, Cliff under $10. I kept getting those messages. Is Cliff dead? Should I sell my Cliff? I'm like, I'm buying Cliff. if I've set my sights on a chart until it breaks me out of it, I'm stupid bullish. And here's my stupid bullish line. When trading cues, how should you use your high-low levels for choosing strikes? Choosing strikes is all up to personal preference. Again, that's talking about options. We can go into options. And I don't like the I don't like losing days to theta. So, and when you're here, these drop too quickly. Even the 2 days, you start to get quick drops. like 5. So that'll drop $1 an hour just in time decay. So I like to go a little bit further out. So say we go 10 days, and this is after a weekend. So this would be a Monday. So I just personal preference. I don't like that. I'll go 1 day past a Monday. And then I would look at probably a 625 because I know 626 is going to be the hang up line. So I would look at 625 with the hope that it goes $1 in the money by the time I sell it. And so I would be looking at that, and your delta's 46, your theta's 40 pretty much. So you've only got a $6 difference. So all else being equal, you need to go up $1 an hour. So you're really playing these for quick moves within the hour. Or if you go up $1, you can hold it another hour. Yeah, I don't like using the charts because you're too close. A lot of people don't have that much money, I notice, and so they like to buy they buy these like crazy out of the money options. Like maybe they buy a 630 or something, or that's why they go closer in time, which is dangerous. There's better ways to do it, but greed does what it does. So they go closer and they go for, say, like these 635s. And see, now look at your delta's 17 and your theta's 32. So your theta's you're losing every dollar you go up, you're still losing $17 on that contract just because time is wiping you out. So you need these to spike. That's the danger with playing these. You need the option to move up, so you get an IV spike and you get the price movement, and then it doesn't. Your theta goes down a little bit. So that's, I mean, you can play these, but you've got to be in and out of them, like boom, boom. And that, I mean, not that fast, but couple minutes to an hour or so. You can do it, but it's ugly when your delta's below your theta. I don't like that. I don't like delta below theta. If you can afford it, I prefer to be safer, and like I was buying these. I had a bunch of these were what I was using, and that's because your delta was almost twice your theta. I think it was twice when I bought them, but yeah, that's what I was looking at. And then, like I said, I also have some stupid options here. I have some of these. where my delta is still over. Oh, sorry, some of these. Where did yeah. I have some of these, the 650s. And then I have some of these, the 680s. And see, these are just about, for every dollar that Q goes up, these stay the same. So then I have these, these are terrible. So these lose. Q needs to go up $2 a day for these to maintain. So any red days and these options just get crushed, absolutely crushed. Because you need to have the continuing going up because your delta. If your delta, if you drop $1, your delta goes down and your theta goes down, and these, yeah, you just get crushed, absolutely demolished in there. But those are more for, like I said, funsies. These were the ones that I was serious about, and I sold them at 14 something. What is my target price? I already sold them. I sold them on Friday. But yeah. That sure looks like the Q's going to pop again, huh? We'll see. It's weird. It's all weird. The charts are all weird. I mean, I don't know if you guys listened to the video from yesterday, but they're weird. Yeah. Oh, this. I want to see the market go up because I want to see this really pop. Okay, I did my macro ramble. I think I answered all the questions. Do we have more questions? Do we have any stocks we want to look at? SVM. Is that a silver miner? Yes, it is. What's the question on SVM? It's a silver miner. Don't sell it. I mean, these are so scary though because they're squeezing. So until it breaks that 5, there's really nothing to do with it. But you're getting so far extended from these. I mean, you can keep going. You can keep going. You can GameStop this. But eventually you're going to come back down here. And this is by the way, this is a 3 of 3. This is what they look like. And we've got so many charts that look like this. Look at this. This was down at $2. Do we have a stock that we're looking at that looks like that chart that's sitting right around $2 and something right now? Can anybody think of a stock that looks like this chart right here that's sitting around $2 right now? There we go. Okay. I digress again. But yeah, there's nothing to do with that. It's just going to go until it doesn't. And the only way to watch is to watch that 5MA and wait for it to break that. And just be aware that when it does, it's going to do it with something bigger than this. Once it decides that it's breaking that, it's going to sell down to like here or here. It's going to be an ugly, ugly day. And it won't just be this to cause that kind of reaction. It would be all the metals all across the board. It would be just a wipeout. And you would definitely know it because it would be market wide. And that day is coming, but not yet. I mean, you'll probably have quick sells and then buy back up, but one day here, you're just going to have a complete boom crush. And that might be after this is $40. There's no way to tell. Here we go again. I'm going on my tirade. This whole thing is based on like $25 silver. Silver's no longer $25. It's $100. So this is panic in price adjustment. Like, oh my God, how much is this stock actually worth? And that's what I'm owners of these way, way back here, way low. These are institutions just now figuring out what's happening in the macro environment. And they're like, oh my God, how do we even value this company now? Because this company that we never pay attention to, that we hate because metals are trash and we want bonds. How do we suddenly value this thing that has something everybody needs? How do we put a value on that? And that's what they're trying to figure out. And they're buying first and asking questions never. Because the answers to their questions are just more. So, okay, there's another little tirade. Iron. Iron had a big day, big breakout. And this, I hate to say it, but with all the countries printing money, that's not just going to go to gold and the metals. It's going to go to crypto too. And I think it's especially going to do it because the United States is using that as a pseudo gold. That's why they wanted to try to con everybody that Bitcoin is digital gold. They want to make that mental comparison to people so that they can con you into thinking, well, we have Bitcoin, so we're good. But yeah, they're totally going to start tying things to crypto. So crypto will rally. And I think it's probably approaching that day. I think it's going to catch people off guard because no one's interested in it and it hasn't broken any of my trend lines. Again, it's the same thing with the Qs. It has had every opportunity to sell. The bears have had every opportunity to take advantage of that and sell it down, and they can't. So I think crypto might surprise people and start flying up. But okay. What do we want to know about iron? My view on iron is not changed. Up, 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 up. This looks like a 1, 2, 3, 4, 5. So we should get a new high. I think we extend it, and I think we actually make a new high before this wave ends and pulls back. But again, if my perception of the Qs is correct and we come out of here with a bullish candle, if we have a pretty good week, or even if we come out, at 630 and then next month we come higher. But if this looks like a good setup, if we break this 637, if we break that this week, then I think we just rip up, and then this just becomes look at that. A, B, C, and this is a 1, 2, 3 in a new, larger wave. In which case, this is your 1, and that's your 2. And so that would give you your stupid targets. If that is the case, then you get stupid targets. Like 143, 142. Oklo. Think I can erase that. Oklo's a strange chart because it's in no man's land. Below the 50, below the 18. I need to see how this goes. I need to see what this does Monday. That looks like it can drop again or pop up. I need to see what that does Monday. That's no man's land. There's nothing to do with that. See how it's in the middle? Give me tops or bottoms, not middles. There's nothing to do with this. I wouldn't touch this with a 10-foot pole on a daily. Again, here we go. I hold it down here at $5. I don't care about it. it can stay in no man's land. But if I don't have a position in it, I wouldn't go near this with a 10-foot pole. There's no reason to. There's better stocks. There's better charts than this. This is a, yeah. Just walk away from this. If you turn on the chart and it looks like that, just walk away. Find something better. If you're all jammed up at a bunch of moving averages, just go find something better. There's nothing to do with this here. If you own it at $5, $10, great. If you want to start a position, wait. Because it can do anything here. It can go up or down. NBIS. This may have 1, 2, 3, 4, 5. So correcting that. I want to see what it does here with the 50, but this looks like it should turn up. You're in this no man's land with this. Is this a bullish trend? That's a lot of overlap. That's not, this is, you never broke that. This is just all a flat. So if you're not moving in, yeah, this, you're probably going to, I don't know. I would have, that's not in any trend. That's not a bullish trend. No. Overall, yeah, that's a bullish trend, but that is not trending now. And that is more likely, I would be more likely to get out of that. See how you're stuck between the 50, the 5 and the mid Bollinger. And these are leveling off. You're not trending. This is, yeah, I'd be more likely to get out of this. What is this? Yandex Technology. Smart products. I don't know anything about that, but I don't like that chart. So I would say overall bullish trend, but it's not trending bullish right now. NUAI. New Era Energy and ooh. All right, here we go. Everybody loves these rodeo stocks. Bullish trend. 2, 3, 4, 5. Unless that. Yeah, that might have reset it. I think it did. So 1, 2, 3, 4, 5. Nope, that's not your 3. That's your 3? No, that's not right. Nope, you're still, but you broke that. That can't be right. Something's not right here. This must be a flat. But this sure looks 3, 4, 5, 4, 5. This looks. This is a flat. Lightning in, lightning out. But is that ending or is that just beginning a wave? I think it's ending. So you've got lower. I think this is ending. I think you're ending here and you're going to get a pullback. But I think this is very buyable. And you'll probably pull back into this range here, $5 or so. Wow, that just started pushing up though. You are really extended. Yeah. I would look for that to pull back, but then take off again. ABEV. Didn't I do ABEV? I freaking love ABEV. Love me some ABEV. Yeah, we're just breaking out. I mean, this is beautiful because look at this on a weekly. That is so money. Oh, that is so money. Apparently, everyone in Brazil is buying beer. That is so money. That is. I just can't stop saying stupid sayings. And here's this is a flat. See all this overlap here, and then you lightninged out, and then you have another flat here with all this overlap here, and you lightninged out, and now I believe you had your first corrective wave coming out of that. Three. Yep. Because here was your 1, 2, 3, 4, 5 with divergence. Come down. There's your 2. And then this turned into a great big 1, 2. And this is good night. Yeah, I look for it to be in the 320s. And this is, again, we'll go to the weekly here. So my targets are here at $16. But because it's sitting at almost $3 right now, you can go in here for Jan and look at these $5 options. Stupid. Shh, don't tell anyone. Okay. Lumen. Lumn. Great. That looks good. That is a lot of overlap. Lightning. And that's a common theme. We're seeing it all over the market. Market loves its flat and diagonals. These are, it's a lot of that. That's a, I mean, this is a clear cup and handle. I mean, you're probably going to take off out of here. What is this? Hmm. This looks like it should take off, but this RSI is not playing ball. It's caught up in a chop. I think it wants to pop up though. And this is, I mean, this looks like a clear cup and handle. I think this wants to go up. I think this wants to skyrocket up. But I mean, it'd take a belief. It's a, because you're not getting it on RSI. EXK. EXK is a minor. It's massively squeezing. There's absolutely nothing to do with it. I made that post when when it was at 9, it was in this chop here and it made this move and then pulled back. I made a post here that said 960 was the last time you'd be able to buy this. And look at it go. And look at us hit targets. So there's where we go next. I mean, these are minors. I already did my tirade on minors. The investment firms are just now figuring out that these things that they never paid attention to are suddenly the hottest thing on the market and they absolutely need to have them. So, yeah, they're going to keep eating these until they get their fill. There's Nothing to do with the XK or any minor. Now, HIMS may have bottomed. We'll see. Let's take a look. It popped over the 5, I believe. Oh, it got wicked at the 5. Nope. Not until it's over the 5. Nothing to do with HIMS. On an hourly, nope. 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 Big fat no. Not with a 10-foot pole. It's squeezing down. You can see that, right? You're stuck between the 5MA and the lower Bollinger. That is a squeeze down. And you tried to get over the 5MA and you got wicked. And that is what? At tops, price rejection, meaning they don't want any part of that still. So why do you? Okay, knee. The opposite, squeezing up. Big old flat. Bullish divergence. Pop up. Should get a pullback and then another pop. Looks good. I mean, you should correct. Corrections are fine. This is part of the nothing stops this train. This is energy, everything. They need energy to build all this stuff. And there's not enough on the planet. So that, again, it's not a joke when I say they're going to burn every fossil fuel on this planet until they can get nuclear up and running. And then that is going to be the next hottest thing. It's the hottest thing now for a reason, because that's the future. Yes, it is going to be an oil-free future, but it's going to take 20 years to get there. And to get there, they're going to make it so there is no more oil on the planet. So it'll have to be an oil-free future, even though we know now that oil is replenishable. But again, I digress. And this is a cup and handle. I mean, this is great. This is beautiful. This doesn't have to pull back. This can just launch. This is uranium. There's nothing to do here. Here, I'll make these easy. If it drops, buy it. Is Vorks a buy now? Do you mean VIX? What's Vorks? I'm unsure of Vorks. Is that a VIX? And no, I would not buy VIX. Nope. And again, I mean, you could get a spike. I mean, buying it is just a hope and a prayer. You could get a spike, though. Looks like it wants to turn up on the daily. on support. So that looks good. I mean, it looks good to spike. But my problem is on the futures. You are getting oh, come on. Sold down. See, you've got a down turning 200. You're below the 50. You're below the 5. This is, you're in the middle of support. So to me, this would be no man's land again. And on a larger scale, with that gap, I mean, you could pop here, but I think you just hit this 200. So what I think is you pop to 1936, maybe you try for 20 and give bears a little hope and dream before you dash it and crush it and murder it right in front of their face and just sell this right down. That's what I think they do. I think they give bears a little bit of hope and encouragement and send this off and yay, and then they murder it right in front of their face. There you go. That's what you get for having hopes and dreams. Silly bears. Do I have leap calls on EXK? You don't want to know what I have on EXK because it's silly. I have these 4 and 15 calls. These are sold. The 15s are sold. The 4s are bought. And they are free. I didn't pay a dime for them. Because I bought these when they were just pennies down here. And then I sold these options for more than I paid for these. So this entire spread was free. So come February, with price over 15, I can sell these for $1,100 and I got them for free. But on top of that, I also have some leaps, 2027s and 2028s. And they're 5 strike and 10 strikes. But yeah, so yes, I do have calls and leaps on EXK. OAJ, I don't know if I know that one. What do they do? Fortress Minerals, iron ore, Malaysia. Really? Low level. Huh. Malaysia has iron mines, huh? Interesting. Well, let's look. Ooh, now I'm interested. Now you've got my eye. That looks fantastic. What's your question about this, OAJ? 1, 2. I mean, this looks like probably a 1, 2, 1, 2, and then this thing's going to really take off. You're declining here. This looks like a good, healthy pullback, though. I mean, you're just turning. So hold up the support. I mean, this is lightly traded. So the hourly is going to be hard to see. But on a larger time frame, that looks absolutely fantastic. I mean, if you're looking at like 80, 90 cent targets, what's a couple cents amongst friends? Jeez. That's not bad looking. But there's your ultimate low. Well, I would say probably this too. 19 cents. Vox Royalty Corp. VOXR. Vox Royalty. Oh, holy cow. Precious metals. Oh, it's a mining royalty and streaming company. Streaming assets. Ontario, Canada. Streaming assets. What the hell? Streaming assets. Okay. I'll stop thinking about that. I can't stop thinking about that. That is dumb. I own a gold mine and a streaming service. Are you streaming your gold mine? Big flat. Lightning. Bounce 1, 2, 3, 4, 5. Yeah, this is probably, I would say, coming to an end, but it's probably just breaking out. You should break those highs. So this is probably just starting to run again. GoRo. That's another miner, correct? GoRo Resources, Gold Resources. Boom. Yeah, I've looked at this before. Yeah, we should come up into this area, which we have. So I would expect to pop out of it a little bit and then get our handle. So maybe we pop all the way over $2. I don't know. This is just turning up too. So look how far they spread apart here. So you could really push this up. So this could go over 260 for a pullback. But yeah, miners. Miners are the place to be. That's where the haps are. Everybody wants to hang out with the miners. Miners in South America with some good brew. Okay. Will the gaps below what be filled? What's my target for EXK short? It's a squeeze. I don't know. Um, I can give you my best guess is that 16 something. There's no resistance. You're way far away from any moving average. You've blown out of the Bollinger. I, I don't, yeah, I don't know what, there's no way to chart this. It shouldn't be here, but it is. It's here because because for the entire life of this company, no one had any freaking clue that this was going to happen. So that's what's going on. I don't know how to chart that. Next target is 1850. Maybe it hangs up at 16. I don't know. The only thing to do is just watch that 5MA. But when it breaks it, it's going to break it hard and fast. These miners are just squeezing. There's no way to play them properly. If you're trying to sell in and out of them, you're doing it wrong. Just any of them. This one I sold calls on the other day. Yeah, you can't even do that. In here, I was like, yeah, I'll take some profit. Like, this is going well. No. So I rolled back. But there's nothing to do with these miners except hang on. And lithium's just starting again. AG, here's another one. And I have this at $8. I just bought it this year too. This was not one of the ones that I hold substantial positions in. I just bought this year. Nickel at 20. I was doing all the posts about it at 11. Just look at it. Seriously, throw a dart. And what's next is this. This is just starting that. So this is where you should be looking. If you're looking to start positions, this is the sector you should be looking at. And not Occidental because it's a pig. Although that doesn't look bad suddenly. I still think it's a pig. I don't like it. Look at that. Look at all that chop it's about to break out of. See, these are just starting to break out. This is where PXE is just breaking out. This is where money should be rotating to. This is where you should be looking. ANGPY. Oh, platinum. Yeah. Yeah. Platinum. And that's going to break out again. That's what's silly here. This is platinum. Love it. Transition from gold to oil. You mean money transition? It's an energy transition. They need they need the energy to build the war machine. So they're going to take the energy anywhere they can get it. And yeah, especially if Trump attacks Iran, that's going to launch oil. Man, all this deglobalization is going to launch oil. It's going to launch shipping because shipping is going to be difficult. It's going to be dangerous and it's going to be expensive to go get the minerals from the places that you need to get them. So it's everything is just a symptom. Am I saying that right? Symptom? Yes. Everything is just a symptom of the root cause, which is that governments are printing money. So all that money is going into the system. Everything's going to get more expensive. I mean, I can call it hyperinflation because it really is hyperinflation. They're just controlling it. Controlling it so you don't notice. But, I mean, gold is telling you. That's telling you you're in hyperinflation. That's telling you. Now, what's really going to screw the world is, oh, come on, is when this breaks that trend line. because then this is going to do what gold is doing. See that big move? And then we corrected it. This was a 5-wave move with divergence. This is a correction. You're going to get a new high out of this, 130. You're coming up here. 207 oil. And how they're going to prevent that from shutting the world economy down, they're going to limit travel. They're going to put people into electric vehicles. That's why electric vehicles are popping. What's happening macroeconomically, investors are just being told by the banks. Those big firms are just starting to put out their year outlooks and notices, and we've noticed that the geopolitical tensions have caused strains on oil markets and all this nonsense and blah blah blah. It's deglobalization and everybody's printing money and nothing stops this train, and this oil is going to shoot through the roof, and they're going to pump every last ounce of it out of the earth. It's gonna get so expensive that every ma and pa will be running out into the ground to try to find oil, like they're freaking Ned Clampett. It's the next oil surge is coming, and it's not an oil surge, it's an energy surge and a money surge. Yes, Indo. You guys aren't believing me. Indo's going to go to $90. Indo will probably go higher than $90. Indo will probably go over $100. But first, it's got to get over this little range, and then it'll pop into this range. And see, the problem is that no one believed that was happening. Now they're being told that's happening, and they can kind of see it, and they're trying to move money, but they don't move quickly or smartly. And these stocks like Indo are lightly traded. That's why I keep all these stocks are doing offerings for this very reason, because money is just figuring out what's happening, and it's starting to rotate. It's starting to take profit on the big caps and go into miners and go into all these other smaller companies. It's starting to figure this stuff out. And so these things are so lightly traded that once the money starts flowing into them, they start popping. And then you have shorts that once these start popping, the people that have shorted these companies for eternity start covering. You're going to start seeing hedge firms going out of business because these small caps are going to start popping off. Because I'm sure these miners are putting hedge firms out of business. VG. Venture. That looks good. I mean, it's just a look good to close this gap, at least, I would think, to 13.16. What do these guys do? Liquefied natural gas. Mm-hmm. Oh, let's see if I can find this one. Shoot, I don't know if I can. No, I don't want to see it by this. I just found this stock the other day. Was it T1 Energy? No, it's something that had a dumb name, and that's why I didn't like it. But they're airline de-icer. And after this storm hits, I just couldn't believe it. I was like, I can't believe I overlooked that stock because it had a dumb name. But yeah, that thing's probably going to gap up massive on Monday. If it doesn't, I'm going to buy the tar out of it. But I got to find what it was again. Can you use Indo as an example to identify RSI high low? Where's the good point of entry on RSI low? You're not going to get an RSI low on any daily for a while because you're going to stay elevated. So what you're looking for is really hourlies, and you're looking for anything that'll reset. Like if this trend breaks, then you're looking for the RSI to bottom here 31 or so. So you'd look for that, and then you'd want to start picking that up again. Or you just wait for big drops in 3 waves. See 3? One, two, three. Big drops in 3 waves. Look at, I called the breakout. All right. But this is super bullish. So you're not going to get big RSI drops until something bad happens. And it does this. Crashes. But you're going to get massive spikes before that. Okay, it's driving me nuts. I gotta find what that stock was. That wasn't it. Spam. This is South American, so that's probably good. Shoot. This is going to drive me crazy now. Oh, Air T. That's what it was. Air T. I was like, what a dumb name. And then I see this. I'm like, oh, that's a pretty good looking stock. I mean, a bunch of chop, and then you have a lightning out. So, or lightning in. So, what's our lightning out going to be? What would be the reason for that? And I look at this, and it's like overnight air freight and manufactures and sells aircraft de-icer and other industrial equipment. Like, oh, shoot, this thing's going to gap up huge. And I can't add this to. Ooh, I can on this. All right. I'll put that in plays because I want to see if this doesn't gap up. I might buy that. All right. Is there anything else? Anything anyone wants to take a look at? The stock that I like the most right now that I've been buying the most lately has been this one, Iridium. See this just breaking out here. I really like this. I like it a lot. Let's see how our stocks are doing. Let's look at NEO. NEO we're holding, so we're all right. Doing okay here. Nothing to panic about yet. Wendy's. Look at this Chop City. Again, this is going to blast. Well, I shouldn't say that. This looks like it's going to blast up right here. Just start blasting up. I think the market goes up. I really do. I think it's just trying to get everybody bearish. Huntsman. I have orders. I have orders if this thing drops. So let's drop or rock it up. AES. I just remember they have a 17-cent dividend on the 30th. So I expect them to spike until the 30th. Seals Corp had that breakout and then retest, which is fine because we broke out of the Bollinger, but I'd still like to see this push it up. I would have liked to see it push it up for, wait, have we done it for 4 days? No. I would have liked to see it push it up for 4 days. Okay. These Seals Corp was a short that could possibly turn into a medium to longer term play. I was looking for a spike here. Maybe we get something more out of it. I'm answering your question on the Iridium target. I'm just explaining how I bought these plays. AES is a longer term play. This is energy. So I'm holding this. I bought a lot of stock out of this. And that's why I was pleased to see that they have a dividend coming up. Huntsman, I bought a lot of stock, a lot of leaps, a lot of options. This is a long hold with a high, stupid target because it's all overlapping. Love this chart. I've gone over Huntsman, but this is a long hold for me, even though I do have, I've got this thing. I've got these options layered. I have everything from March down. I think I have some March. I think I started selling them. I bought some pretty cheap ones that I could just sell on a spike, which we had that spike right after I bought them. Wendy's, I'm waiting for that big spike. Wow, this looks really good on a weekly. I didn't even look at this on a weekly. Look at that. That's just turning up on a monthly. Look at that. Everybody's going to run out and get their Goya burgers. Oh man, that looks good. See, we're setting a price. We're setting a hard line right here. That monthly is just starting to turn up. That is crazy. I wonder if you have divergence on the monthly. Wouldn't that be something? You do have divergence on the monthly. This thing is going to come out of here something fierce. It's all that, as much as I would like to have hoped that people were being healthy, all that money is going into the system and people are going out and buying trash food with it. It makes me sad, but I'm going to make some money off of it. Neo, again, we're okay as long as we're in this structure. If we break it, then we'll have to revisit that, look at it. Okay, so now we can go to my target for Iridium. And it's stupid. $120. And it could squeeze much higher than that. 182 something. But, and now that I just think of it, this is the place to be. This is the guy. Look at that. It's just, see that green just starting again? This is going to be the one. Look at all this overlap. And then lightning in, lightning out. Let's go IPI. And again, this is lightning in, and we're just getting ready for our lightning out. This is a big time frame for lightning in, so big time frame for lightning out. But 2030s, this is going to be a $300 stock. 10x. 120 for iridium. That's a high. What is 5E2? Is that a thing? I used to love Wendy's. I'll be honest. I used to get their spicy chicken and a junior bacon cheeseburger with a Frosty. Oh, man. Can't eat that food no more as I'm about to close this down and go get ice cream. All right. Is there anything else? Lightbridge looked like it was going to break down, and then it picked it up right at the end. It was odd. And this has major resistance right here. And if with oil breaking out, that should take your uranium with it, because that should set the panic off. Like, okay, oil's getting expensive. We need alternatives. All right. Okay. Thanks, everyone. Good luck.